The U.S. economy is heading for a depression. Dear Americans, brace for impact. The U.S. economy is heading for an imminent depression, possibly as bad as the total economic collapse of 1929 and as early as 2023. This is not a far-fetched story to merely grab your attention. It is an accurate prediction that has been causing an awkward hush-hush buzz and serious concern among the top American political and business elites since mid-2020. It is based on economic facts, historical comparisons, and top-notch analysis by renowned experts and investors. Are you worried yet? You should be, and here is why. If you thought that the U.S. stock market has been acting rather crazy and contrary to the common wisdom and predictions put forward by top bankers, analysts, and investment advisors, you are right, and your analysis is justified. Even the U.S. Federal Reserve, Fed for short, has been sending conflicting messages about the state and future of the U.S. and global economy. Since the beginning of 2022, the world entered a new phase in which COVID has become a mere endemic, treated the same way as the common flu. However, the legacy of COVID did not vanish nor diminish. It left the global economy drowning in ripple effects that are a natural and predictable result of the global monetary response to the crisis. Here is the pickle, according to numerous experts, and specifically the renowned investor Jeremy Grantham. The beginning of 2022 marked the beginning of a super bubble in the U.S. stock market, and everyone should expect it to burst, thus leading to economic depression. Grantham stated on several occasions in 2021 that from the moment the USA began drowning the markets with cash and stimulus packages while lowering the interest rates to ridiculous lows, in addition to bailing out big corporations and the rich, they created a fertile ground and all the factors that eventually lead to economic depression. Grantham also elaborated that the global economic strategy over the past 2.5 years has been a copy and paste fiasco that merely mocked the old rescue policies and strategy of the USA. It was and still is a standard response that was utilized in the past. He cited that the strategy did not work in the past and is flawed at best because it merely encompasses recession-causing factors such as lower interest rates, printing more money, bailing out businesses with a focus on too big to fail corporations, lower corporate taxes, near zero taxes on dividends and other securities-related profits, and increase in income tax mostly for the middle and lower classes. According to him and some other experts, the result of this strategy was always the same. It resulted in increased and bigger corporate welfare handouts, inflation, a rise in mortgage and debts default, and a sharp rise in the value of assets, thus inequality too. Why? Nearly 99% of all worthy assets on the face of our planet are owned by the top 10% known as the upper class. So, do you have some doubts about Grantham's opinion and analysis? Every word and opinion by 83-year-old Jeremy Grantham regarding the global economy and its future is worth noting. He spotted and profited from the bubbles in Japan in the late 1980s, the dot-com or blue-chip disaster in the late 1990s, and the U.S. housing catastrophe in 2008. In 2021, he predicted that a recession is on the way, and now he is more certain than ever that an economic depression is imminent, at least in the USA. During a more recent interview with Bloomberg, Grantham detailed several aspects and facts that have been reiterated by his peers. He identified the various stages and circumstances that hint at a possible or imminent super bubble burst. He pointed out that U.S. stocks are simply way overvalued. It is hard to disagree with him on this one because even famous billionaires such as Elon Musk and Jeff Bezos spoke in the past 2 years, publicly or in letters to investors, that their flagship stars are overvalued. He spoke quite a bit about overenthusiasm because it is a major issue that has been noted by observers in 2021 and as recently as June 2022, during which the U.S. stock market was on fire for all the wrong reasons. Thus, a major decline of as much as 25%, which is technically halfway to a full-blown collapse, was followed. Indeed, this can be confirmed by looking at the sudden massive declines in the net worth of numerous billionaires who tend to keep most of their wealth in stocks and options. In simple words, all the wealth that was accumulated in 2021 has been wiped out by the second half of 2022. Grantham also described the recent behavior by the Fed and major investors as simply crazy, pointing out that while the Nasdaq was hitting new highs in 2021 and the first half of 2022, even as numerous listed companies did not make any money at all, the Russell 2000 was in decline. Grantham even admitted that he, as the co-founder and chief investment strategist of Grantham, Mayo, and Van Otterloo, a Boston-based asset management firm with more than $150 billion in assets under management, actually shorted the Russell 2000 index and made quite a profit. He emphasized that the contradiction between the two indices is very, very worrying and a signal of a looming depression due to crazy, unsound investing behavior that does not reflect reality. Grantham added that there are numerous strong signals that the probable U.S. stock market collapse will be accompanied by a burst in the U.S. real estate and mortgage market not so different from the 2008 collapse, which is bound to magnify losses and prolong recovery. Grantham also had a take on commodities prices and global warming. He cited that despite great progress in resolving the supply-demand chain crisis, the prices of commodities, oil, electronics, food, and consumer products in general are still going up and are predicted to keep rising. He also emphasized that these issues can and will become worse as the effects of climate change on farming and the global food basket get worse. According to the UN Food Index, food prices globally are higher than ever. Other UN reports state that even in rich developed countries, such as the USA, the number of food-insecure people is rising rapidly. As for labor shortages, it is a great concern not just in the USA, but also in China, according to Grantham, where the birth rate has become a serious issue that is forcing the Chinese government to reevaluate its entire economic strategy due to imminent labor shortages in the future. Grantham also had some harsh words for governments and corporations due to their performance in adopting green policies, strategies, and tackling climate change issues. His opinion regarding the importance of this issue is well situated and sound to the highest degree, not just because of the health of the planet and humanity in general, but also due to its immense importance to the future of the global economy. Indeed, most nations and major power corporations around the world have been phasing out coal and even oil in power plants and adopting gas instead, which is cleaner, as a bridge until all fossil fuels are replaced with clean renewable energy sources by the late 2060s. Grantham repeated a piece of advice that has been going around for a while now in the realm of professional stock trade and investing in general. He advised that investors must look beyond the U.S. stock market and mobilize their investments to emerging markets in Asia in particular, where stocks are rarely overvalued. Grantham also made a very important call to investors. He emphasized the importance of investing in capital ventures, citing that new ideas and innovations in progressive projects are not only a source of security during recessions, but are also major contributors to economic strength and job creation. In conclusion, the U.S. Fed is failing at increasing interest rates in a manner that should also reduce inflation without creating higher employment rates, especially in the manufacturing sector. The stimulus strategies it implemented over the past 2 years caused the national debt to skyrocket to new highs that are simply unmanageable, and sadly all the wealth that was created in 2021 has been wiped out in the second half of 2022 due to obvious reasons including a poorly formulated, unsustainable strategy, the sharp rise in inequality, and poor performance in tackling climate change and labor shortages issues. Numbers cannot lie. U.S. asset prices have veered 3 standard deviations from the trend. So, if you are an investor, do not be surprised if the U.S. stock and housing markets decline by 50% or more in the next 12 months. And by the way, according to Grantham and other experts, this time, there will be little to nothing the White House and Fed can do to cushion the fall to rock bottom. So, that's all for today. If you enjoyed watching this video, leave a like, subscribe to this channel, and share this video with your friends. We will be back to you with another video very soon.